Very good afternoon, good morning. Welcome to the Futures live trading session with myself, Giles Cochran. Good to see you, Carolyn, Konstantinos, Adair, Ryan. Glad you all could make it. I'm just going to run through today, reading through the dot plot. It's a skill that's really worth doing, and actually, it's not very hard when you have it explained. Hey, Ryan. Hey, Carolyn. So I want to run through that today in the session before the US futures session gets going, and just run through the expectations for tonight and what will be the surprise as well. I've closed my euro dollar and my longs now, and I've closed them up this morning, and I've closed my silver longs now. Yeah, that's it. And just go through it because rather than wait for an analyst to explain it, it's relatively straightforward when it's explained. So we'll have a little look at that. All right, okay, so let's go and we'll have a quick look at sentiment. Sentiment is obviously cautious because we're about to move into the Federal Reserve interest rate meeting coming up tonight. So markets just all clamp right down until we get some direction from the Fed. So in terms of data that we've got coming out, very light on data. We've got the Bank of Canada interest rate decision. No surprises expected there. The only thing that we're looking at is the interest rate projections coming up. That's going to be the focus. The big picture is we've seen dollar selling, right, in expectations of Fed interest rate cuts. We're expecting a cut tonight, so that's no surprise. If we get a cut, that's nothing. If we get a cut by 50 basis points, that's a surprise and will result in the dollar selling. But we also need something else. We need to see them signaling 3 interest rate cuts this year, and I'll show you what that looks like. We also ideally would want to see interest rate expectations for next year come down significantly lower. The dream scenario would be they signal 3 interest rate cuts this year, and then they signal interest rates at 3% or lower for next year. That would be the dream scenario. And that would likely result in further dollar selling, a nice surge higher in euro dollar, nice surge higher in gold, and a nice move up in silver, as well as a most likely move up in equity markets. So sentiment at the moment, just seeing a little bit of profit taking going into the meeting. There's none of that me at all. See gold, bulls, bit of profit taking in copper, bit of profit in silver. That's just on what the Fed are going to say, because there's so much risk and there's been such a run into the expectations of the Fed interest rate cut. The way the markets are, their forward pricing, they're always going to, the price we see on the chart is not what markets think are happening now. The price on the chart is what markets are thinking 2, 3, 4 months in the future. So they're forward looking. And that's why we're seeing profit taking now, because unless there's a surprise tonight, if the Fed just signal 25 basis point cut, if they only signal 50 basis point interest rate cut, and they keep interest rate expectations for 2026 in line with the projections, which you can see here, if they're in line with projections at 3.4%, then that's not a surprise, okay? And you might see the dollar strengthen on that. So I'll run through how to go through that. Equity markets, just seeing tentative price action, and the market's just caging up, waiting for the Fed meeting and a bit of profit taking. So that's the major drivers. Now, here's what to look for the dot plot. Where are we? Yeah, right. So the dot plot can be found on the Federal Reserve's website. You just go along, and the dot plot is released every other meeting. So the last dot plot was in June. We had July interest rate meeting, and so the next dot plot is coming up today for September. And when you look at the dot plot, all you do, go along to the projections materials, that's what you want, and click on it here. Now, the dot itself is here, right? And each board member puts a dot where they think interest rates are going to be for the coming period. So this year, you can see they're expecting interest rates to be at this level for the end of 2025 for 2026. They're putting a dot where they think interest rates are going to be, some are right down 2.5, some are over 4 up to 4.125, right? So you've got that big range here. Now, when you see that dot plot, it's very hard to action that as a trade because you're thinking, well, hang on, where are the dots? Where are they not? So there's another document that comes with the dot plot that's more useful. And that more useful document is here. It's this summary of economic projections table. This is like a dream table for understanding what central bank policy is doing, because you've got GDP, you've got inflation, unemployment, and you've got the projected interest rate path. Now, this is the dot plot from June, and you can see here, they explain where they expect the projections to be, right? And notice it's a median projection. So just see, the median is the middle projection when the projections are arranged from lowest to highest. So in other words, interest rate expectations, when you got there 3.9, that's the median. So when you arrange, this is the highest, this is the lowest. If you put them all into a line, which dot forms right in the middle of those, that's the median, and that's what gets reported, right? Notice the central tendency, that excludes the 3 highest and the 3 lowest projections. So on this, right, the dot plot, they take out the 3 highest, take them out, and take out the 3 lowest. And then you get the central tendency. And the range is all participants. So you've got this expressed 3 different ways. So what, that gives a slightly different skew on each data point. The most important one is the median. That's the first thing you look at. So for tonight, let's look at the median projections. And you can see median projections, I'm going to bring the dot plot over to interest rate. So let's look at the projections for tonight. So it's 3.6, 3.4, 3.1, and 3.9 is the current year, so 2025. 3.6 is 2026. 3.4 is 2027, and 3.1 2028, and 3% longer. So that's what's expected. So we go back to the data, you can see, okay, so for 2025, they're expecting it to be at 3.9. Now, straight away, if you look at short-term interest rate markets, see what they're expecting? Do you see the issue? They're expecting it to 3.6. So in other words, short-term interest rate markets are seeing 3 interest rate cuts. If the Fed just see 2 interest rate cuts at 3.9, then the dollar will probably pick up. Right? See that's the first thing to be aware of. So what will be the surprise? The surprise will be if that comes in at 3.6 or lower. So if the Fed confirm 3 interest rate cuts this year, then that will be only in line with projections, but it will be a bit of a surprise, even though it's in line. Because some analysts are talking about this 2025 projection. They're saying, oh, the Fed only saw 2 interest rate cuts. Will they go ahead and see 3? If they do go ahead and see 3, it is only what's expected, but it will be, strong for dollar selling, right? I'm not saying the dollar will sell off, but it's the first piece of the jigsaw you need. The second piece of the jigsaw that you'll need is the first year, right? So that's 2026. It's expected to come in at 3.6 again, like it did last time. Now, what to look for? Say that comes in at 3 or lower, that will be a surprise. Because what that will communicate is that the Fed's really thinking of cutting interest rates. And that will be dollar downside, euro dollar upside, gold upside, should be stock buying. So look at that carefully, right? Now, you now know how to look at the median, what the median's showing you, the central tendency, what that's showing you, and the range. And if you're in any doubt, the explanations are here underneath the dot plot, so you even get it explained. So actually it's not too hard to read this document. Also, you get GDP. Now, what we have to watch out for is anything that surprises markets significantly. So if inflation, ticks up aggressively and GDP ticks down, then that could be a stagflationary print, and that could be negative for stocks. So if you're unsure and you're wanting to trade the event, the stock reaction could be complicated tonight, but the dollar reaction should be more straightforward. So a euro dollar upside would be the most obvious trade. should we get this come in at, if this comes in at 3.6 or lower, and that comes in at 3 or lower, you'd expect an upside in the euro dollar pair. Then you need to just watch the GDP. Watch that the growth is not like a big revision downwards in growth, and that unemployment is not a massive spike up, and that inflation isn't a big spike up either, right? The lower that inflation print, the better, okay? And inflation has been pretty benign at the moment. So the focus is going to be where the Fed see interest rates, and then just check that there's nothing stagflationary there, right? So that's the dot plot, and you can just get it here. Some of you can just get it on the Fed's website, and I'll leave it there. You can have a look at it and have a read of it yourself, right? It's a good little habit, and then you can compare it to what other analysts are saying, and it just sort of builds your knowledge, really. It'll just build your analysis. Or fine, just wait for what the analysts say. It doesn't matter. You know, you're welcome, Najem. It's very welcome. It's worth looking at, and if it's anything like me, is when you find something complicated at first, sleep on it, come back the next day, and it just gets a bit easier. And that's definitely the case with this. Look at it. You know, some people are more mathematically orientated than others. Sleep on it, and your subconscious works on it. Okay, so let's now jump over to the charts and look what we're looking at. On the weekly, value area high, touched, rejected. On the hourly chart, buyers trapping sellers at that level. So we're roughly in this sort of buy zone. Looking at the data, the delta is negative at the moment, but we are rejecting this value area and trapping some sellers. So we're quite neutral, but more negatively biased. We're underneath the standard deviation, and you can see the market's been trending lower. Looking at the 15-minute chart, you can see that the value area we've broken through pushed up into, just gonna check, my profile was playing up yesterday, right? What would be nice here is if we saw those buyers trapped, which would be from this value area, then I could look for any move back up to the VWAP and then selling off. Right? So that'd be interesting to look at the open. So seeing sellers trap these buyers, then I look for a sell up into that 666 region and sell off. Let's just check the implied volatility levels. I'm gonna log back in here. I think we're quite near that implied volatility level again, aren't we? That 6667 region. Let's have a look. 6677. So we are still 6667? 6677. So we've got a standard deviation up here. Just going to put that in. So we've got a standard deviation sat up there as well. Interesting level. And aside from that, just going to wait to see what we get at the open. Just going to make sure I've got the squawk on. And then finally, just going to share with you the trade I have got on still, which is an Oracle. Did like this breakout of this potential flag pattern. And you can just see this is clearly just trying to find some support. There's cloud revenue hopes for this stock, as well as TikTok data potential as well, that's just supporting Oracle. We've broken out that level. We had some positive news here. If you notice here, technically, we've fallen into that rising window, and that bottom area is just holding for now. I'm holding this area, partly if you look at the seasonals, you can see that from mid-September into early October, there tends to be a weakness of 0.77%. Now, sometimes you're getting 11% drops. So from current market pricing, you've got sort of an 8% drop to the 50% exponential moving average, and I've got to stop the other side of this pattern here. So I'm quite happy to hold longs through the Fed meeting based on, if I can get through the Fed meeting, then got this nice run, average 4.46% to the upside and 84% winning trade percentage over the last 25 years from the 2nd of October to 6th of November. So it's a nice kind of pattern. And if you take out the dot-com bubble data of 2000, right, you see it's even better winning trade percentage. And if you took out global financial crisis as well, 2008, here, right, so it's a 91% winning trade percentage. So do like it. and obviously entered in here, and that's what I'm going to hold on based. And those C-Snells just giving me a little bit of and any pullback here. I can see that as a potential opportunity for buying. You know, buying from this 250, 260 region would be fine as well. You know, anything down there at the 260, I think would offer pretty good value, really. All right, folks, I'm going to call it a day now. Happy with those sellers trapping these buyers up here. Happy to take a bounce off that VWAP if I can ahead of the Fed. Other than that, it's just waiting for the Fed meeting. Folks, see you tomorrow. Take care, everyone. Yeah. Cheers, mate. Bye now, Jem. Oh, well done, Carolyn. I'm glad you got something out of that. It made sense, a bit of profit taking ahead of the Fed, so that was a smart move. Well done there, Jem, too. Take care, everyone. Bye for now.